Greetings, members one and all of the Salivation Nation. Is the Federal Reserve about to buy gold to prop up the dollar? Let's explore. A very interesting article from Zero Hedge was sent to me by a member of the community who actually used their real name, so I don't know what their channel name was, or else I'd give them credit, but thank you so much for sending this along to me. Very fascinating indeed. This is on Zero Hedge, Break the Glass. Guggenheim's Minard warns Fed may start buying gold to support the dollar hegemony. Don't fight the Fed may soon have a very different meaning for the long-time asset gatherers and commission rackers who spew the age-old phrase to justify buying stocks at the first sign of any easing by central banks. And Guggenheim Investments Global CEO Scott Minard is right. Not fighting the Fed may soon mean buying gold alongside them, as he explores the Fed's increasingly unorthodox policy options ahead of the economy remains mired in a protracted downturn. I'm kind of disagree a little bit there because, these easing policies that they've been doing are not unorthodox. It seems to be the norm these days. For sure, it's crazy. Minard's line of reasoning is straightforward and logical, as numerous challenges for the Fed, including the need to make large-scale asset purchases to keep credit available at attractive rates in the face of a multi-trillion-dollar budget deficits. The Fed may be forced to buy gold to maintain the appearance of responsibility for the world's reserve currency. This is not the first time we have heard of such blasphemy. Remember, in the eyes of the establishment, as far as their public-facing narrative is concerned, as opposed to their own personal actions, owning gold is an affront to the omnipotence of central planners, an admission that all is not well. In 2016, PIMCO strategist Harley Baseman suggested that instead of buying bonds, stocks, or crude oil, the Fed should unleash a massive Fed gold purchase program that could echo a Depression-era effort that effectively boosted the U.S. economy. At the time, Baseman said that the Fed should emulate a past success by making public offer to purchase a significantly large quantity of gold bullion at a substantially greater price than today's free market level, perhaps maybe even at $5,000 an ounce. It would be operationally simple, as holders could transact directly at regional federal offices or via authorized precious metal assayers. What would be the outcome of such QE for the gold bugs look like? A summary assessment. A massive Fed gold purchase program would differ from past efforts as monetary expansion via quantitative easing, the transmission mechanism that was wholly contained within the financial system. Fiat currency was used to buy fiat assets, which then settled on bank balance sheets. And since QE is arcane to most people outside of Wall Street, and NERP seems just bizarre to most non-academics, these policies have had little impact on inflationary expectations. Global consumers are more familiar with gold than the banking system, thus this avenue of monetary expansion might finally lift the anchor on inflationary expectations and their associated spending habits. The US dollar may initially weaken versus fiat currencies, but other central banks could soon buy gold as well, similar to the paths of QE and NERP. The impactful twist of a gold purchase program is that it increases the price of a widely recognized store of value, a view little diminished despite the fact that U.S. relinquished the gold standard in 1971. This is a vivid contrast to the relative and visible inflation of financial assets, with the perverse side effect of widening the income gap. In fact, since the end of 2018, the dollar has been drastically losing value against gold while maintaining some semblance of stability among its fiat peers. And we can see here in this chart the U.S. dollar versus fiat and U.S. dollar versus gold there. Quite telling for sure. So the Federal Reserve will face numerous challenges in the months and years ahead that they're meeting this week, and that's why gold prices have kind of recovered some of their losses as of late because of concern about what could happen there. Economic output will remain below potential for years to come as we deal with the pandemic and its long-term scarring effects. An additional challenge will be the U.S. federal government's budget deficit, which will exceed $3 trillion this year, with significant likelihood that it could be larger. Yeah, probably $5 trillion is more like it. Absent further action by the Fed, the deluge of Treasury securities will likely start pushing interest rates higher, threatening the overall economic expansion. The Fed cannot allow this to happen. As I gaze into my crystal ball, the Fed's roadmap is likely to include the following progression of policy tools as the economy remains mired in a protracted downturn. So extended forward guidance. The first and most likely policy option will be to announce a lengthy period of forward guidance. Forward guidance is nothing more than the Fed saying it does not expect to raise interest rates for a period of time. Given the current situation, forward guidance will be likely to be aggressive, with the market already pricing rates staying very close to the zero bound for the next 5 years. Wow! There's not going to be very much shock at all if the Fed announces that it will keep interest rates at zero for 2 or 3 years. Currently, the 2-year Treasury note is yielding 21 basis points and got as low as 11 points on May the 8th, and the 5-year note is 46 basis points, pegging the overnight rate at zero, would have a limited effect of reducing rates at the front end of the yield curve. To make sure that the longer-term interest rates stay at a range and provide greater support for the U.S. economy and finance in the U.S. Treasury, the Fed will have to provide forward guidance as a zero interest rates and be necessary for a protracted period. And here we can see the beginning of the rates for the 5 years, how that plays out. In other words, it's a formal QE program that will happen too. But the thing is they got plenty of tools in their chest. Buying gold, I don't see that as being, it talks about other things here, other tools. These other tools are talking about equity purchases, negative interest rates, what they've balked at. But but this is the thing is here the breaking the glass, looking at the possible roadmap for the Fed. We cannot avoid discussing this other tool. Central banks around the world, including the Fed, hold almost 35,000 tons of gold reserves. A central bank owns gold to buttress its reserves with an asset that becomes increasingly valuable in a severe crisis. There are no signs that the world is questioning the value of the U.S. dollar, but it is clear that it has been slowly losing market share of the world's reserve currency. With the Fed going all in on financing the government deficit, the U.S. dollar could be at risk at negative speculation of its status as the dominant global reserve currency. Investing in gold may help offset this trend. The accumulation of gold as a reserve asset historically has been seen as a responsible policy, responsible in periods of crisis. But my argument is they really don't need to do that. And though, yes, the dollar may slowly be losing its market share, we know the BRICS nations would like to get off the dollar, and that is precisely why China and Russia have been accumulating a lot more gold. But even with all the gold they've been accumulating, they're nowhere near the amount of gold that the U.S. government already has. In New York and in Fort Knox. Now, obviously, some people question it. We do need to have a full, transparent audit of the gold, but I do believe it is there. And I believe that there's other things that the government can do rather than show its hand and give value to gold that they don't want. They don't want people to, because there's enough people around the United States and even the world that have gold. If they buy it at $5,000 an ounce, well, man, they are really saying something about gold and admitting its value. No. My guess is probably what they will do is reset the currency, reset the dollar, and find some other way, some other smoke, some other mirror that they will use to reset the dollar, provide a new value. In other words, they will redefine fiat and what it means to be fiat and give a false sense of confidence in the dollar that we've not seen before. This is the new dollar, kind of like what Zimbabwe did in 2008, but not getting near to that level of inflation, hyperinflation before it happens. But so this is what they're saying, that this could happen. We shall see. He's saying that the U.S. dollar may initially weaken versus fiat currencies, but other central banks could soon buy gold as well, similar to the past of the QE and NERP. And so we'll see. We'll see what happens. But it is an interesting speculation here if they were to start doing that, because to my knowledge, the Federal Reserve, the government, or anybody in that official capacity has not added to their actual official gold reserves. I don't know how long. I don't know when the last time we bought gold. What, 800,000 some odd tons that we've got, metric tons of gold. So we'll see where it all plays out. But my guess is that this will not happen. There's no need for it, especially when they have all these other tools here for their roadmap. Until they see people and then still they start to see hyperinflation, I don't think they're going to do something like this, especially knowing that they have that. I think one thing that they may end up doing is they may say, we're going to have a new dollar. We're going to have a new dollar, and this new dollar, though it will not be based on gold, we will not go to a gold standard, which, by the way, that's the last thing they want to do. They don't want to have any restrictions. But what they may end up doing is saying, hey, we have this new dollar here now. It's going to be revalued as such. But we're going to show you, we're going to do a transparent audit of our gold reserves. We hold the most gold of any other nation in the world. We're going to make a big deal out of it. Here's the gold that we've got. So, worst case scenario, we are solvent as a nation. So yes, you can use our dollars, and you should continue to use our dollars, world. And why? Because we are the economic superpower of the world, and even though China is gaining ground very quickly, we have all this gold, and we are accounting for it. And we're giving a transparent accounting to all the world to show that we've got it as our insurance policy as a nation. That's what I think they may do if things got really bad. Let me know what your thoughts are below. A very interesting article indeed, and thanks again to the individual who shared this with me. And I want to encourage you to come back every day. There's been times, and it happens more often than not, where the videos don't get notified when I post a new video. So I encourage you to come back to the channel and subscribe if you haven't subscribed already. But more importantly, bookmark the page and go to the videos page, and you'll see likely a video there every single day. So there you go, and a multitude of gratitude to you all for taking the time to watch. And I encourage you to please rate, share, comment, and subscribe.